Alrighty, everybody. Hello, welcome to another geopolitical analysis video. It's been a while since we did some coverage here. Um, Please like and subscribe the channel. Support it as you know best to do it. Either comment, like. I'd appreciate it if you shared this. What a day today! Last day of trading week. We saw the second largest bank um, default in the history of the US. This comes to no surprise because we're seeing again, because of what I mentioned months ago, there will be such a liquidity tightening that banks will not have access. And of course, we've seen less and less deposits. So it comes to no surprise. Of course, the bank regulators and all the founders and all the talking heads in this space will tell you, oh, we didn't see this coming. This is something that we didn't see coming. Of course they saw it coming. It's in the books. If you do just an analysis of any simple accountant will be able to discern what's going on. But again, regional banks become the prey of these larger institutions. As we know, America is just a company. It's just a company. Corporatism, along with the government, runs supreme. And these greater banks, just like what we saw in 2008, 2009 with J.P. Morgan sweeping up all those assets from um, Frank Burns, I believe it was the name of that bigger bank at the time. That J.P. Morgan just got all the good assets for cheap. The same thing is going to happen now. And of course, again, FDIC, nobody's really going to give you all your money back because there's a there's a cap, right? So moving on, the markets cratered. We saw all the financials drop. We saw incredible volatility of the last few days. And of course, we were looking at the numbers, and the data suggests that the economy is strong in the US and the job numbers are high, but the Federal Reserve is on course. Don't fight the Fed, many have said. And this is what's happening now. We're seeing tightening of liquidity in the markets. We're seeing higher interest rates, which means a lot of people and a lot of companies are not profitable, don't have a good, healthy cash flow, will default. And here in Canada, for instance, we're seeing mortgages go to the private agreements. So you have these private mortgages in order for some people to get into the housing market. And of course, with these aggressive rate hikes, anything is possible. The biggest debt bubble right now is in the housing market, and it comes to no surprise as many people were getting these low interest loans and were trying to get overvalued assets, right? A home shouldn't be an investment. It should be a place to live. But here we've turned it into a casino where people flip houses. And of course, you have foreign buyers coming in the Canadian markets, and that drove up the prices. Months ago, I said to family members and friends, look at the housing market. The sales will plummet, especially with the increase of interest rates. Everybody believes that things go parabolically up. Nothing just goes straight up in a line or down, just like the markets. We're seeing a deflate, a bubble deflate, and that's going to take some time. But we're seeing that this is something that is healthy, and this is what capitalism is. You get the capital to work on a business. You got long-term contracts, long-term extensions often to work to produce products and services. If that doesn't work out, you have to get flushed out of the market. The more you retain this, it's like keeping a drug addict, right? In the addiction. And that's what happened over the last decade, where companies were getting cheap funds, low interest rates, and of course the Warren Buffetts of the world, right? Those people are not geniuses who invest into the perfect asset. I'm sorry, but they got all cheap liquidity because they have access to it, right? So instead of praising the likes of Warren Buffett and others, let's see who produces the products and services. And they're the people we're actually going to endure this recession. I believe we're going to a deep recession. I've said this a while ago. I think everybody needs to be alarmed. We may not live in the US, but the entire global system, the economy, is debt based, and it is an American package. It's an American made type of economy. This debt based economy cannot go on, though. And you hear many talk about a big reset, and in the finance we talk about central bank digital currencies that might come in, and you're going to see flush out of all these weak companies, and a lot of this debt is either we're just going to default on it, which I don't think that the government would do that, but you're going to see the central banks propping up more cash to buy the debt so we don't default. Same as the markets. We should have seen this bubble deflate a long time ago, but we printed $5 trillion in 2 years because of COVID. So, in terms of the financial aspect, I want to bring up to your attention, this week was terrible. And a lot of people are under the impression that we're in a new bull market, right? They look at certain fundamentals, they look at certain indicators, and they tend to think that we're going upwards. And you know what? This was just a dip in October. Now, granted, October and March are two volatile months. If you look at the last 100 years in the markets, those 2 months are very pivotal, and you often see deep spikes during those 2 months. So, in my opinion, we're going to see another 20-30% drop in the NASDAQ and the S&P. Now, I know I have people, and I have some of you who said to me, hey, recession is the bull market, because the recession, that's when central banks, they decrease interest rates, they start printing, and companies get access to cheap liquidity and will be able to bounce up. Well, the problem is that the Federal Reserve cannot do this, because if they actually did this, inflation would go up well over 10%. So they have to be committed to suck that liquidity from the markets, get those trillions of dollars. Like I said in my video months ago, if you look back, I said trillions of dollars will be missing. And that will come from any money you got, from any money I got, other companies, defaults. And that's when you're going to see the centralization of control, where larger institutions buy up your houses. Look at what's happening with Blackstone and BlackRock around the world. And this is what's frightening, because I don't believe this is capitalism anymore. This is just an uber capitalistic era that we're in, where we see these large institutions scoop up. And I think it's all by plan. It's all engineered so you can have centralization of control. And I feel for the Americans, because you hear the president say, oh, we were creating more jobs, the economy is stronger than ever. Meanwhile, 2 regional banks are defaulting, right? This should never happen. This should never happen in one of the strongest economies of the world, yet it does. So let's move from the finance. I know some of you might not be interested in this, but it will affect our life, because I think the next 10 years we will be part of a deeper recession. Now, there's been a lot of crises, a lot of train wrecks. In the US, we've seen solar plants explode, food production caught fire, the Ohio tragedy, and in Greece, Turkey, we've seen the earthquake that transpired. In Syria, of course, we're seeing that it's almost as if crises just like implode, and then they just ripple, and then things take on into almost like a metaphysical aspect, and we see tragedies form and crises form all over the globe. Now, granted, the Ukrainian war has escalated, and this is not just Ukraine and Russia anymore. This is NATO and the East. We're seeing a lot of countries that have a strong anti-American, anti-US agenda and view supporting Russia. And we keep seeing this game, this perception deception, where people who hate the US foreign policy are supporting Putin, And those who hate the authoritarian Asian dictatorship like or very autocratic, let's put in a better word, autocratic system, regain support um, from the Western countries to Ukraine. Now, there's a lot of squirmy things going on. There's a lot of corruption, a lot of money laundering. 5 American politicians, sons and daughters, are working for Burisma Energy, the Ukrainian energy company. There's a lot of shady things going on. So this is no longer about the liberty of people fighting for their land. And Zelensky weeks ago had a meeting with BlackRock, right? So you're seeing now these major loan groups coming in and swooping up, like I said just before, minutes ago, assets, swooping up and buying countries, buying assets. And this is what we're seeing. And this is very dangerous. I believe we're going to see this on a aggregate scale. We're going to see it on many different industries, many different markets, where the larger companies get stronger, they buy in the smaller in the smaller companies and assets and countries, and that gap, that chasm between the wealthy and the poor is just increasing, increasing, and the middle class is the one that gets shafted. But tell me, do you find this normal? Do you find this normal where time and time again we come into these weird, shaky periods where politicians and supposedly leaders, who they're not leaders, they're puppets. They're really puppets. They say one thing, but then an opposite thing occurs. It's disgusting. It's honestly disgusting. Nothing of this is democratic. Nothing of this is free markets. Nothing of this supports the open economy where in capitalism, every individual can compete for the best outcome. So this is my analysis of the week. We saw the S&P drop quite a lot, and it has much more to drop. And a lot of people talk about fundamentals, and fund managers talking about, oh, bull market, this. Leave those people aside. They have no touch with reality. Fundamentals, you cannot understand what's going on with the markets with fundamentals, PE ratios, or cash, or how companies are doing. Because after that intense printing, things have got so skewed, it's really impossible to discern a good investment from a bad one. Now, there was a very interesting report that came out a few months ago by BlackRock, and anybody can look it up and download it. I read it and it was interesting. That really shows a playbook for the next decade how to invest. And unfortunately, this is not a game for the long-term people. So if you are some of those people who like to buy stocks, hold them for a very long time, it seems that this is probably not the good period for you, because there's going to be so much turbulence. You might barely get what you're really looking to get within the decade. So this is a market for traders. This is for people who like to do day trading or swing trading and take advantage of the volatility. Now, one thing about Ukraine, one thing about China as well, we see again that the world has been split. We see the world has been split into the East and to the West. The producers, the commodity-based economies, the markets that are sick and tired of the US dollar. As of today, I was reading the Saudis and Iran are restarting talks and are rebuilding embassies. Can you imagine that? One of the largest, the strongest US allies cut agreements with Iran and start conversations. This is showing exactly what the BRICS have announced, how they're pushing back on the US dollar and all these other countries that are, again, commodity-based markets, producers. Sure, they're autocratic political systems. They're not the Western democratic-based, electorally-based systems that we in the West admire. But then again, Here in the West, we vote in both sides that appear to be the left or the right or the center do the exact same thing. And the reason why I want you to be skeptical is because the US economy, whenever it craters, whenever it's about to go into deep recession, it always points to war. Just look at the American history. It needs war. It's a war-based economy. That is why you've seen all these stocks rally that have to do with arsenal and technology. And this is something that really keeps buoyant the markets. A lot of people get angry when they hear this and they say, oh, well, you're supporting the East. No, I'm not. I'm not supporting anybody. I'm pro-human. I'm looking at things with the most critical eye and objective way to really understand what's going on. Okay. So we're seeing this clash between the East and the West, and it's all about the dollar, in my opinion. I really do think that they're trying to get the American dollar propped up, and that's why they're maintaining this war, because they know that the dynasty or the hegemony of the US is fading. And US is not going to vanish. The dollar is not going to vanish. But we're going to see these blocks, these unions of companies, countries who will have their own trade agreements. So very interesting things, food for thought over there at the end of the week. Incredible to see what's going on. If more banks default, that's going to be scary. That's why personally, I think have cash aside, buy some gold, silver coins, and don't leave all your money in the bank. Here in Canada, for instance, you don't get the best rates. And it doesn't make sense because you think to yourself, the federal funds are increasing, but why shouldn't I get like a 5 or 6% in the bank? That's why you see a lot of investors flocking towards the short-term treasury bonds. They're becoming now the safe haven. And I think that we're going to have a lot of interesting weeks. I think that if the Federal Reserve announces a 0.50, like half of 1% increase in federal funds rate, I think the market is gonna just dump, go crazy downwards. And this is what's going to be really problematic for the retailer, because looking at the charts, retail money is buying the dip. And Wall Street's been so clever. They've trained the retailer, the average Joe, to think, buy the dip, it's dropping, buy it, right? To prop up the market. And then you have these algos, these machines, they sell and they make a killing, and you lose all your money. That's what's going on right now. And it's unfortunate because people don't learn and they go back again for the same old trick. Whereas if you notice, smart money, institutional money, is waiting on the sidelines. So I don't want to be all doom and gloom here, but we have to navigate within these parameters and understand what's truly going on. I don't really have much more to add to this. We're already in the 18-minute mark. Just wanted to say, have a good weekend, enjoy, and be mindful, be charitable, be good individuals, good citizens, because it all starts from the basis, from us, from the communities to the ground up. And I think we're going to brace for a very hard recession. And a lot of people are going to be surprised by what happens. Again, not to toot my own horn here, but years ago, I made a video called COVID-19 Economy with only stats, no bias, only stats. And we indicated that after COVID, what ensues is life-changing. You have automation come in. Surprise, surprise. In the stock market, we were hearing AI. Well, years ago, we were talking about after COVID-19 in one of our videos early on, you will have mass automation. You will see that people will be losing their jobs. Machines will be coming in. AI will be the new buzzword. And as we predicted this, all the indicators that we used and all the data is slowly unfolding. And we're seeing this. And that's where the scare for central bank digital currencies comes in, and UBI. Because look how the government finds a problem that it created, long-term problems, because it's like chess. You got to think few moves down the road. They create the problem, they have the solution, they're just waiting for the reaction. So they created bad economies where all these politicians, they don't pay taxes. They put their money in offshore companies. You saw the Paradise Papers, um, the Panama Papers, so many other exposés about this. Then you have the largest corporations. They don't pay their taxes, so it's just the middle class and the average person, right? They create the problem. They destroy the economies. Lab leak or no lab leak, virus, whatever. They use that, and then boom, you have inflation. Oh, you have recession. Oh, unemployment skyrockets. But it's okay. We got AI. We got robots. So now what happens? People lose their skills. They look around and it's getting harder and harder to find jobs, to get into certain positions. You have to be highly specialized in certain circumstances. But what happens is that this is where they promote the universal basic income, the central bank digital currencies, where they tell you, hey, you don't need to work anymore, but you're not allowed to save. So you become utterly dependent on the system where you don't work, you're not allowed to do certain things, and you follow what the big brother, big daddy tells you to do. Shut up, put the mask on, don't question the vaccine, don't question this, don't question this. Here is your money, your free money. 3 grand a month. You were making 2, 3, here's 4 grand a month, but you cannot save. You have to spend in this debt based economy that is spiraling out of control. You have to spend it all. You cannot save. You cannot invest anywhere else. You have to pay and you have to promote and push this debt-based economy of products and goods and services. That's the future that I see. And again, a lot of people are flocking to gold. Did you notice the price of gold? Go check the price of gold, what happened this week and the weeks before that. It's been surging. And despite the interest rates, because whenever you have a strong dollar, normally gold loses its value, all these precious metals, because they're seen as insurance. Now that the dollar has been keeping up, gold is rising. It's showing a resistance. So this inverse relationship is sort of fading because a lot of people, again, are afraid and they see this as unstable and they see that where we're going is if you don't cut rates, you know, if you don't cut rates, you're possibly going to go to another printing of capital. So free money like before. So possible hyperinflation at this point, or you go to a recession. The government doesn't care about a recession because they can always prop up the markets, right? And they can always present to you these lies that the jobs are strong, unemployment's low, etc., etc. So I didn't mean to keep this too long, but we have to be well prepared and it's good to diversify. And if you have any exposure in the markets, it's good to take it out. I've been shorting the market for months now. I've been telling people, short the market, just short the market. You're easily going to make a 20, 30%. And at the same time, just find defensive plays and be nimble and don't be trusting and don't buy the dip. Don't have that mentality. Um, and some of you should consider taking that excess liquidity, that cash from your banks and keeping it on the side because you just never know. You just never know. There are a lot of Western countries over the last few years that had bank runs where ATMs didn't have money to give you, where you couldn't get your money. And unfortunately, you had, especially in Greece, you had circumstances that you had, I'm forgetting the term now, you had capital controls, which is the worst thing. You don't want to go through that. So prepare yourself, maybe buy some gold coins, some silver coins as insurance. You don't have to buy heck of a lot. Just keep it there, sleep a little bit better, maybe some Bitcoin. And yeah, because again, I think we're on for a wild ride. That's my analysis for today. I know it's been a while since I produced a video. Thanks so much for your support. Please drop a like, comment, share this to people. I really appreciate it, and we'll see you in the next one. Bye for now.